Hey everyone, welcome to my channel Inside Knowledge. My name is Anand. I hope you have seen my previous videos. If not, please watch. So this time I'm going to do, I'll share my knowledge on the stock loan. Sometimes it is known as also like securities lending and borrowing. Some people say SBL, securities borrowing and lending, whatever you can call it. Like, so in normal layman language, like sometimes we use like stock loan. It's like the same, stock loan and borrowing. This process. I've worked in this process almost like 10 years back, but I still have some good like fresh memory on those because that was my favorite process one of the time. So securities lending and borrowing, I worked in the middle office, I worked for the settlement, and I did the reconciliation as well. So I have a little bit of I'll not say that I'm very expert, but I have a like fair idea about how does it work. So let's start like why there is a securities lending and borrowing team, like in banking or in investment bank or any investment firms as well, or in brokers as well. Why? So the reason is you must be thinking how do they work and what is the process and what is the involvement in the trading and everything. So I'll start with the from the scratch, like from the start, like how does it work. So for imagine there was a trade booked by the desk and they bought something and they wanted to sell out to some other counterparties, but unfortunately when the stock came in it was used by some other trade, because it's not like just like one trade get traded in the bank. There's a multiple number of trades are out in the market from the bank side, so it could happen that the position could be taken over by some other trades. Now it's very easy to find out which trade took the position. When you are working the settlement, you know like how does it work. So you know like which trade actually took the position for the share which you bought. So what you will do, because you have to deliver somewhere, so you need the shares. So what you will do, you will reach out to the stock lending and borrowing team. So I don't know exactly when it started. We can say like the birth of this team, but I'm sure it must be somewhere like when they started facing the issue like trades are getting failed, and for not able to deliver those to the counterparties started charging the claim for the fails. Plus sometimes the market regulations, you are not allowed to fail the trade. So they came up with the stock lending team. Okay, so this team will help us. So the same way, when the team was designed and developed, the idea behind using the stock loan team is not only fulfilling the securities by borrowing from somewhere else, they also worked on the haircut. So what do you call the haircut is the difference between borrowing and lending fees. So it's a very vast area, but I'll try to cover this. So for example, I'll show you on my board like what happens, and I'll try to explain you whatever I can, whatever I know. Yeah, frankly speaking, some people I've seen the comments like you should prepare some script and try to put it in some fancy thing. I can't do that because I'm not a person who is into full-fledged like devoted to video making and all those things. I just do for my hobby. So I'll try to explain that what happened and how the buying and selling and then the stock lending comes in the picture and how it works. Okay guys, I'm sure some of you will not see my face, but I hope you can see the board. So let's start. So trader buy 1000 shares. So when he bought from JP Morgan, he wanted to buy from JP Morgan, and he must have agreed with some of the counterparties, for example BNP, that he will sell 1,000 shares to BNP. Now in between there's a T+2 settlement. Everything was agreed, everyone was ready to exchange the cash and everything, settlement were good. But on the settlement date, the trade which we were expecting to come from JP Morgan from the start of the day on this settlement day was failing. So JP Morgan was failing to deliver us the 1,000 shares. Now we have to deliver it to BNP. Now what is the situation is like, we don't have, by like almost like by afternoon we don't have any shares. We are not able to deliver to BNP. I'm sure BNP, they must have agreed with some other counterparties that they will buy the shares from us and then they will deliver it to someone else. So there will be some failed cost. Why? Because they will be not able to deliver it. They can charge us some fine on something, whatever, they will get it from the other counterparties. So now the trader, he don't want to spoil his relationship with the BNP. So what he will do, settlement plays a very important role here. So settlement, on the settlement date, if they see the trade is failing like maximum by 10 a.m., they should change JP Morgan. What is happening when you guys are delivering these shares? If they say we are working on it, we are not able to find the shares from where, they must be buying from somewhere else. You should not wait after that. When they say they are waiting for shares from somewhere else, or they are short of shares, something like that, they're trying to arrange the shares, immediately you need to inform to middle office. Middle office will inform to desk, the trader. Now there will be communication how it is going to cover, how they are going to cover the shares if JP Morgan fails to deliver. Trader immediately, when he knows like there is a very less chance of getting shares from JP Morgan, trader will approach to, we call it SBL, stock borrowing and lending team. Now stock borrowing and lending team, what they will do is like they will go to the market, they will talk to their clients, whoever they know, and they will agree with some other third party, for example Morgan Stanley. So stock lending borrowing team agreed with the Morgan Stanley to borrow 1,000 shares. Now Morgan Stanley will not only give you 1,000 shares just like that, they need something collateral, because that collateral will be a kind of when you, for example, when you're buying a house, you need to give something. If you're borrowing a loan, you have to give something as a collateral that it will safeguard the bank. So same way Morgan Stanley will ask for 1,000 shares, he will ask, okay, you can give me cash. So the cash, mostly they ask whatever the value for this 1,000, they will ask more than that. For example, the value of 1,000 share was 1,000, Morgan Stanley will ask for 1,100, for example. So there is a difference of 100. So this is the value of that stock that Morgan Stanley will ask for, like 1,000, they will ask for 1,100. That's the haircut difference. This is the haircut difference. Because whatever happen, if sometimes the stock value goes down, he will be a little bit of the safe side. If it goes up, Morgan Stanley may use that extra cash as a profit. Now there's two things. One, they will give the cash, they will ask for the cash, or they will ask for the any other securities which is valued more than this stock. So if they're asking for cash, then it will be cash collateral. If it's asking for the stock, then it will be stock collateral. And for every request, when they get the collateral, they try to follow a practice to maintain whatever they have borrowed or whatever they have lended to the different counterparties. So Morgan Stanley will have, means definitely they'll also have their SBL team. So their SBL team will talk to the our SBL team, and they will exchange the 1,000 shares, and they will exchange the collateral. Once the exchange happen, stock lending team have 1,000 shares. They will inform to desk, okay, we got the 1,000 shares. Now the 1,000 shares they received from Morgan Stanley will be delivered to BNP. Now BNP trade will settle on that day, but the story doesn't end over here, because this trader who bought shares from JP Morgan has to pay some charges to SBL team, and these two teams, like the trader and the SBL trader, they agree on certain fees that will be paid to the SBL team, because they are going to borrow the shares from the other counterparties, and they have to exchange the collateral, and then the collateral will be given to the Morgan Stanley. So that is the transaction which is happening. These two traders, this like our trader and the our SBL team, they will agree on those terms, that we are going to exchange these number of shares and these number of stock collateral or cash collateral. Now the the most important point is, you have to make sure, if you are an SBL middle office or a settlement team, you have to make sure the 1,000 shares which you receive from Morgan Stanley should go to BNP. It should not be taken by any other trade. There's a lot of ideas to stop get used these 1,000 shares to other trade. What I used to do, I used to block all those, like normally I used to put like an indicator to that it should not settle any other trade which require 1,000 shares, so that my 1,000 share get delivered to BNP. So that was my role in middle office and settlement. We used to follow it. Now once everything is done, you have like the trade is settled. Now Morgan Stanley and like my team, our like SBL team, they will work on the rest of the part. Now whenever the SBL team agrees with the counterparty, they agree for a certain period of time. They will not borrow for one day. It will be not for a day. They will agree that, okay, if you're borrowing it from me, we will have this for like 30 days. For 30 days, in between the 30 days, Morgan Stanley can ask us to return the 1,000 shares in one piece, or he can ask to return the shares into 10 different pieces. It depends upon the Morgan Stanley how they want to exchange it. It also depends upon the SBL team. They will send a notice to Morgan Stanley, okay, we have this much shares left with us. Would you like to take 50 shares today? Would you like to take 100 shares today? If Morgan Stanley agree, then they will exchange the number of shares with the Morgan Stanley. Not only the shares, they will exchange the collateral as well. If they are exchanging 50 shares, Morgan Stanley has to give equal whatever they have taken it from us as a collateral. They will calculate and they will give the equal collateral back to us. Now here, like whatever the price will be there in the market, they will trade on that. They're not going to trade on the price what it was agreed, because if, for example, if we borrowed the 1,000 shares at 100 from Morgan Stanley, and after 2 days it became 120, so definitely like we are going to pay this much of difference. Why? Because we have to manage our book of record to reflect what was the stock we borrowed, what was the price during that period of time, or what is the price now. Now if there is a difference, that will be passed on to the desk. The trader who bought these the 1,000 shares, because they have to maintain the book of record that, and they have to reflect it on the P&L as well, like how it's going to impact. Now, for example, if SBL team try to exchange the entire 1,000 shares from Morgan Stanley, now is we are returning it back. So there's a term which is called as the stock lending and borrowing, like lending return, the borrow return means whatever I have borrowed, I'm returning it back. So that is borrow return. Lending return is like Morgan Stanley, who lended to SBL to us. He will ask, "Can you just lend my return? Like whatever I've lended you, I want to get it back." So that is known as lending return. So from two perspectives, borrower will have the borrow return if he's like whatever he borrowed, and lender will say as a lending return what he lended. So whatever the lending and borrowing happen in between these two teams, there is, as I said, there is a collateral team. They work simultaneously with Morgan Stanley collateral team to exchange the cash or the stock, whichever was exchanged during the initial the borrowing time, or we can say the lending period. Whatever they have exchanged, these two teams will work together to exchange the cash or the stock. Now, for example, if the trade was Morgan Stanley gave us the trade for 1,000 at a price of he took a collateral of 1,100. Now, definitely the price is above, like above the market price. What was the value of that security? That was 1,000. He took 1,100. This 100 that I told you, that it is known as a haircut. So he's going to use this 100 to, like anywhere, like he can use the 100 to buy another shares, another stock, and he can try to make money with that 100 share. And eventually that's like a game. That's like what the stock lending and borrowing team that does. They try to lend different counterparties so that they can get the collateral which is valued more than the stock, and they can use the collateral difference to invest in some other product and make money from there. And that haircut of 100 can give you a return, whatever they can try to get, like from 100 to 200 they can try to get 200, whatever the market price and whatever the strategy they have used. So this is how stock lending and borrowing team work. Now the challenge when I was there in the stock lending middle office was it's a very critical team, I will say, because any SBL trade cannot fail. It should never fail on that day. That was the rule of thumb, that it should never fail. If it is failing, then you need to inform to a SBL desk that this trade is failing. They will cancel that trade. Why? Because of the collateral which is involved. There is a high possibility that the collateral would be transferred to the counterparty and the trade might fail. So they will lose that collateral for even for one day also. So they try to, if a trade is failing on that day, you need to inform to stock lending and borrowing desk that this trade is going to fail. We are not going to receive the stock from the counterparty. And it happened multiple times with us. Like we try to borrow, when we try to borrow like millions of shares, it could be possibility that millions of shares is not available with the other counterparty. Definitely no one is sitting with 100 million, like a millions of shares like every day. They will use those shares to make money. And when it's like a very kind of Apple, for example, the Apple, then definitely you will not, they will not have like 1 million shares, or like even like 100,000 shares is very hard to find in the market, because this is very demanding. So if securities, which is very demanding in the market, is very hard to get borrowed from somewhere else. So the best part, whenever there's a trade happen, trader who initially buying and selling any trade, he should be well aware with the situation that there could be possibility that whatever, if he's buying from somewhere, can fail to deliver. Also, if it is he's failing to deliver, it could be possible BNP is trying to deliver to some other counterparty. If he fails, the counterparty will pass on the charges to BNP. BNP will pass on the charges to us. We will pass on the charges to JP Morgan because he is the culprit. He is failing to deliver the shares to us. If there is a SBL team involved, and if SBL team also fail to get shares from any other counterparty, then there will be a possibility that this trader can ask that go to the market and buy whatever stock you can find in the stock market. They'll try to buy the stock from the market, or this trader will directly go to the market, stock market, and he will buy the shares whatever the price it will be. So when he's buying these shares, for example, for 1,000, the value was 1,000, he's buying it for 1,200, he will agree. There's one, either he will agree with JP Morgan that I'm going to charge you this 200 to you because you are failing to deliver me, or he will take the loss, because most of the time they take the hit because of a relationship what they have in the market, because it's not like a one-time trade. They trade with them hundred of time in the lifetime, so they have to maintain a relationship so that they can trade with them again and again. And these guys, they don't only it's not like they are just calling them or getting somewhere on the email. They have like Bloomberg chat. So in Bloomberg chat, they are connected and they try to communicate. Sometimes these all three will communicate that what we are going to do. That middle office will be involved, that what exactly is happening. So I hope I've tried to explain you a little bit of stock lending and borrowing. I'll see if I can get few more context on the stock lending and borrowing, like how to calculate the haircut difference. It's really critical a little bit, but I'll try in my next video. I'll try to get a little bit of context and to explain you on that part. Just feel free to ask me anything if you have anything in your mind. I'll try to explain. I'm not a very scholar person, like who's very educated or something. I just know what I have learned in my with just working in the different places. So keep watching my video. I'll try to explain more about what I know, and I'll try to share my experience. I'll try to make a video on the middle office. That is like my ongoing. I need a lot of details, so I'll try to share with you as soon as possible. I can do that. Please keep watching my video and just try to grab whatever you can learn from me, and I'll share whatever I know. I'm happy to share anything what I know with everyone. Thank you so much.